Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. The US and China are miles away from resolving the trade conflict, says US Commerce Secretary Wilbur Ross in an interview with Bloomberg. CBI registers an FIR against former ICICI MD Chanda Kochar, her husband Deepak Kochar and Videocon chief Venugopal Dhoot over alleged irregularities in loans given to Videocon. 1st of April 2020 will be a Y2K moment for the Indian auto industry as stricter emission norms kick in, says M&M Managing Director Pawan Goenka. An infrastructure and construction major Larsen & Toubro and India's largest car maker Maruti Suzuki will report their numbers today. Frankly, it's not as big a day for the broader markets in terms of numbers as it is for the large caps today. It's a bit of a different kind of a day. However, we'll get to that in a bit. First, let's take a look at the trade setup for the day. The world markets were okay. Firstly, the news around the world. So 2 or 3 pieces that we should highlight. On the UK side, the Sun reported that Theresa May's new Brexit deal has gotten a backing from the Democratic Unionist Party. The DUP is one of the parties that gives support, and I think it is an important trigger or important moment for this government and this whole moment. So let's wait and watch how it shapes up. I'm not an expert really on how the Brexit situation evolves, but this, to my mind, seemed really important when you look at all the news flow surrounding this piece. So this is one piece of information that people should watch out for. The pound took a bit of a leg up in trade yesterday after this news was reported. Wilbur Ross on the US side says that the trade resolution is still miles and miles away. So this is an important statement given by Wilbur Ross in an interview with Bloomberg. Of course, Kudlow in a statement later on said that Donald Trump is more optimistic of something happening, but this was something that ideally had the potency to bring about the market slightly lower on these days when the markets tend to gyrate a lot on any news regarding the trade war. And frankly, about the Cold War threat, George Soros says that the US and China Cold War threatens to turn into a hot one, essentially giving out what markets and market participants believe or eminent investors believe is the way forward for the markets, keeping in mind what happens between US and China. Frankly, even if you look at Davos, the global slowdown had enough and more shades of the US-China trade war rhetoric thrown in almost every single conversation. So not surprised that George Soros had to say this as well. None of this has had a really big impact on the markets overnight. So keep that in mind. If you just look at what the US markets did in Friday's session, they didn't buckle down too much. NASDAQ, in fact, was about 0.2% in the green. The Asian screen is looking awash with green. The SGX Nifty 2 indicating a start of about 0.5%. But for the world markets, by and large, after 4 straight weeks of gains post-Christmas, this could be the first week wherein the markets pull back a little bit. It could be a natural progression as well, but just got to keep statistics in mind. Our markets, well, it's been a seesaw battle, but today we'll start off in the green. What to watch out for in the session today? I think it's all about results at the large cap arena because 2 important numbers come out today. First, the Larsen & Toubro, and I think their commentary on how they see order book and the business environment shaping up is very, very important from a construction stroke cap goods perspective. Maruti Suzuki, again, a very important set of numbers, and their commentary about what happens going ahead would be important. And then a clutch of mid caps which are important. To my mind, a lot of NBFCs and important NBFCs, Diwan Housing for reasons of its own, Grah Finance for reasons of its own, and frankly how the low-cost housing ticket finance is shaping up, and Mahindra & Mahindra Financial, more important from a commentary perspective as to how do they see the rural spend shaping up in the first half of the current calendar year in the run-up to the election. So I think very important numbers and companies which will give some very important commentary coming out with numbers today. So do watch out for all of these. However, what are the stocks to watch out for at 9:15 a.m.? We don't have too many large caps out there, but important announcements, important news, important results as well. So Biocon, the Q3 numbers beat estimates. The net profit jumped 2.4x. Revenue rose about 45%. Net margins expanded to about 24% from 21%. Remember, it was also lower taxes compared to what was earlier forecast for the year that led to the profit growth looking pretty strong. So do watch out for Biocon, as also for Pfizer. The net profit up 51%. Margins expanding a bit, 30.1% from 25.8%. Optically seem okay. Let's wait and watch if Pfizer doesn't react too much, really. Low volume stock, but could have a reaction in the session today. Lind India, the promoters have rejected the discovery price. The delisting plan fails. An interesting one. A story about this up on the website as well. So do tune in and see, or do log in and see what this whole piece entails. But an important one, we'll discuss about this a bit later on, but could be a stock in focus today. And PNB Housing Finance, the numbers optically seem strong. The higher upfront income on loan assignment aided numbers. Let's see, there's a bit of a reaction in the session today on this one. So mid-caps, some of which could react positively to the set of results that they've come out. However, let's tell you what's lined up on First Word today. The collection of the top editorial stories, it can't get bigger than banks, and two important ones. The CBI alleges quid pro quo between Chanda Kochar, Deepak Kochar and Venugopal Dhoot in the first information report. Charlene D'Souza will bring us the fine print. There soon will be a new man at the helm of Yes Bank. Vishwanath Nair will tell us what Ravneet Gill brings to the table, and I'll try and piece together as to what happens to Yes Bank, or what possibly could happen to the institutional holding of Yes Bank as well. The next piece, as mutual funds faced a lot of turmoil in the December quarter, HDFC AMC extended its lead. Amit Sarkar will join us with a comparison of the two largest players. Lower sales volumes, discounts and rising costs are likely to reflect in Maruti Suzuki earnings. Yatin Mota will tell us what's expected today. And Mahindra's Pawan Goenka lays out the challenges in shifting to Bharat Stage 6. We get you a slice of that conversation from Davos. CBI has registered an FIR against former ICICI Bank CEO Chanda Kochar, her husband Deepak Kochar and Videocon Group Chief Venugopal Dhoot. The case relates to alleged irregularities in transactions between the lender and the private entities. Remember, this is the same issue that led to Chanda Kochar's exit from ICICI Bank. Charlene D'Souza reports.
The Central Bureau of Investigation on January 22nd filed a first information report against ICICI Bank's former MD and CEO Chanda Kochar, her husband Deepak Kochar and V.N. Dhoot, the managing director of Videocon Industries, over alleged irregularities in transaction between the lender and private entities. The loan transactions detailed in the FIR took place between June 2009 till October 2011. Chanda Kochar took over as Chief Executive Officer of ICICI Bank on May 1, 2009, and according to the FIR, 6 high-value loans to various Videocon Group companies were given during this period. These loans have turned NPA, resulting in wrongful loss to ICICI Bank and wrongful gain to the borrowers and accused person, according to the CBI FIR. The alleged quid pro quo detailed by the CBI is in the case of a rupees 300 crore loan given on August 26, 2009 to Videocon International Electronics, where Chanda Kochar was one of the members of the sanctioning committee. Now, how this loan actually panned out. On September 7, 2009, the loan was dispersed to Videocon International Electronics. On the very next day, that is the September 8, 2009, V.N. Dhoot transferred 64 crores to New Power Renewables, which is managed by Deepak Kochar. The loan was transferred to New Power Renewables from Videocon Industries through Supreme Energy, which are Videocon Group companies. According to the CBI, this was the first major capital received by New Power Renewables to acquire its first power plants. Further, the CBI alleges that ICICI Bank has also released the security available in the form of fixed deposit receipts of rupees 50 crores in the accounts of Videocon Group companies, Sky Appliances, Techno Electronics, without any justification. The CBI went on to say that the role of senior officials who were on the bank's credit committee at the time may also be investigated. These officials include Sandeep Bakshi and KV Kamath.
Let's wait and watch. ICICI Bank was slightly weighed in trade yesterday. Don't quite know what kind of an impact could this have on that stock, but something that had an impact on the Yes Bank stock after months of uncertainty over the leadership. The private lender has named Ravneet Gill as the next CEO. This came out at 3 p.m. yesterday. The chief of Deutsche Bank in India will take over from Yes Bank founder Rana Kapoor, who will step down at the end of this month. But the question to a lot of people's minds is, who is Ravneet Gill? What does he bring to the table? Vishwanath Nair Johnson with a brief biography. Vishi, good morning.
Interesting question, Neeraj. Good morning. But Ravneet Singh used to head Deutsche Bank India. I mean, as of now, still heads it. Eventually, he will step down from his position and take over at Yes Bank on the 1st of March. Now, he beat internal candidate Rajat Monga to the position. Rajat Monga was widely expected to take over because of his, he's been there since the first day at Yes Bank. And also he handles a lot of responsibilities there. So the expectation was generally that once Rana steps down, Rajat Monga will take over. But clearly a dark horse sort of situation coming here. But interesting things about Ravneet Gill is that he managed Deutsche Bank's India business at a time when there was significant turmoil with respect to firstly, the fallout of the global financial crisis, which was hitting all lenders across the world, especially Deutsche Bank. Then later, he took over in 2012. In 2015, the bank was caught with the whole LIBOR scandal, which was another big hit for the bank. Eventually saw its leaders, Anshu Jain and Jürgen Fischer, leaving. At that time, Ravneet Singh ensured that the India business remained stable and remained profitable. As of March 2018, the bank still reported about a 910 crore profit, which is more to say than a lot of other banks in India. So that profitability of the bank continues to remain. Back in 2014, he tried to grow the whole retail book at Deutsche Bank. His predecessor, Guneet Chadha, had already started the process of becoming a strong retail presence. But Ravneet Gill continued with that thing, and then he ensured that housing loans and small business loans were the primary focus of the bank to grow its retail presence. So that worked for a while, and then eventually, of course, bad news started hitting. Just in the housing finance business, Deutsche Bank reported about nearly 3% gross NPA just in March 2018. So compared to some of the other lenders in the market, and housing finance is generally considered to be a very safe business, right? 3% is a significantly high NPA ratio. But because of a strong transaction banking business that Deutsche Bank currently has, they have a combined loan book of about 1 lakh crore, of which about 47,000 crore comes from funded and 53,000 from non-funded exposure. That strong transaction banking business ensured that the overall gross NPA for the bank still remained under 1%. So that is obviously a strong point. That is also a point where Yes Bank is not very strong at it in terms of transaction banking. So Gill's entry will help Yes Bank focus on that business, grow that business better. He has a track record, he has the contacts, he can do this better. One thing that some of the industry insiders and people close to Ravneet Gill pointed out is that maybe he can talk to clients a little better, maybe he can improve his engagement. Probably Yes Bank is the platform to do that. Another thing is that his retail dream, which he wanted to achieve at Deutsche Bank but couldn't do, maybe Yes Bank is the platform for that, because Yes Bank has about 15% of its loan book coming from the retail lending operations, nearly 17% just from SME loans. So, considerable size of book. Also, Yes Bank's book is much higher, about 3 times higher than what Deutsche Bank's book is at currently. So maybe it's a good platform for him to focus on that retail business and grow that business better. So all in all, the main agenda for Ravneet Gill will remain to prove to the market that private banks are as safe as they were before. And this period of, imprudent lending to companies, that is now over. He's the third of the new CEOs that we've seen in private sector banks. Amitabh Chaudhary took over at Axis, Sandeep Bakshay took over at ICICI, and now Ravneet at Yes Bank. So this will be their agenda for the next year, 2 years at least, and then overall growing his presence as a universal banker rather than just a corporate-focused banker. That will be his focus most likely.
Wow, interesting. Bit of a sneak peek into what Ravneet Gill has done with his current or soon-to-be previous stint, and what could be on offer at Yes Bank. Vishy, thanks for putting that into perspective. Really appreciate.
Thanks, Inish.
If indeed Ravneet Gill manages to do all that which he was talking about, what could it do to the Yes Bank stock? Now, difficult to say that, right? But here's some numbers. Just essentially 2 pieces of numbers. One is the foreign portfolio investors' holdings in comparable private sector corporate facing banks. I have not kept Kotak and HDFC Bank out here because they've largely been retail focused. But here's the FPI holding in ICICI, yes, Axis and IndusInd Bank. And what this very interestingly shows is how the holding, FPI holding in Yes Bank has come off quite significantly. As of Q3 FY19, Yes Bank, FPIs or foreign institutional holders hold as of December 31st, 36%. Look at the numbers for an ICICI Bank, which are at 42%, or an Axis Bank at 47%, IndusInd Bank at 53%. And ICICI Bank's case too, those numbers have come off, but still higher. So the question that comes to everybody's mind is that would FIIs be a lot more sanguine about a Yes Bank now, considering that there is a credible outsider who's now leading the bank? And can these numbers revive a bit? Can FIs put in fresh money into a Yes Bank? Also because Yes Bank, compared to all the other peers, is cheaper. With reason, yes, but it's cheaper. So Yes Bank currently at about 1.47 times price to book versus ICICI Bank about 1.98 times, Axis Bank about 2.23 times, and IndusInd Bank about 2.81 times. Remember, Kotak and HDFC Bank are a far cry. But both on the valuation front as well as on the ownership front, Yes Bank a lot lower than all of its peers. So if they manage to do things right, then you never know. Just one last piece that I want to add out here. Almost every brokerage and every investor that I spoke to personally as well have said that they are all waiting for the divergence report to come out. Once that comes out is when they'll be able to take a call about this. At 8:30, we'll do a conversation with one of the analysts as well. So this is an important one to monitor today too. After the 9% up move yesterday, can there be more in store? Let's wait and watch. The next piece on First Word today is about asset management companies. Now, mutual funds saw a lot of redemption pressure in the third quarter as the liquidity scare triggered what some would call a knee-jerk reaction from investors. But not all fund houses were as badly affected. Samit Sarkar has the performance of the two largest fund houses which came out with numbers to see which one performed better in the last 3 months of 2018. And Samit, optically, I know with the numbers that HDFC AMC managed to do a lot better than
I'll also give you the reason why he did and
Precisely.
why Arnam actually did not.
Let's get into that. Yeah.
So if you see on a standalone basis, HDFC's growth rate were much better than that of Reliance Nippon. Now, HDFC's AMC's revenue grew nearly 2%, while the net profit growth was 25%, aided by the absence of upfront commissions that we had seen in the third quarter. Now, while that of Arnam, if you see on the other hand, their revenues dropped by nearly 12%, while the net profit decline was nearly 17% compared to last year. Now, revenues declined because of two reasons. First, muted AUM growth because of the volatile equity markets, and second is the change in product mix. That is, more funds had come in towards ETF, low-yielding ETF and liquid funds, and that is the reason why Reliance Nippon's revenue growth was lower by around 12%, and the net profit was lower by nearly 17%. Now, this percentage drop, if you see, it looks very bad for Arnam when compared to HDFC AMC. But if you see the unit-wise data, you will get a more clear picture for comparing both the AMCs. Now, if you see revenue as a percentage of as a percentage of the total AUM. Now that for HDFC AMC has declined by nearly 1.5 basis points, while that of Reliance Nippon has declined by 1.8 basis points. That means that the volatile equity markets has impacted the revenue of both these companies and not only Arnam. And on the bottom line front, HDFC's net profit as a percentage of AUM, now that grew by nearly 0.7 basis points. Now this was purely aided by no upfront commissions in the third quarter and because of a higher other income, while that of Arnam, now that declined by nearly 0.7 basis points. Now that is because again of because the company has been following a trail commission basis model and not upfront commission basis, and that is the reason why there was they received much less benefit of this ban on upfront commissions, because they are used to follow trail commission basis model, and so this resulted into a lower benefit on the bottom line for Arnam. Now if you see the equity AUM, the one that gives you more yields for the AMCs, for Arnam is obviously a much smaller amount when compared to HDFC AMC, but if you see the growth rate when compared to HDFC AMC, it has been higher for Arnam. Arnam's equity AUM grew at around 11% compared to last year, while that of HDFC AMC grew only 2.6%. Lastly, on the valuation front, HDFC AMC continues to trade at expensive valuation when compared to Arnam, and that has been the case since listing of HDFC AMC. Now, if you see the price to earnings based on FY20 EPS, for Arnam it is close to 14.99 times, while for HDFC AMC it is close to 32.43 times. And if you see as a market cap, as a percentage of mutual fund AUM and the total AUM, the difference is much higher when it comes to Arnam and HDFC AMC. Market cap as a percentage of mutual fund AUM for Arnam is close close to 9.9 times, while that of HDFC AMC is 20%. And market cap as a percentage of total AUM for RNAM is 2.2%, and for HDFC AMC is 9.4%. But this has been the case for both the parties since the listing of HDFC AMC. But now what is more important is the outlook for these parties. Now, two things that one needs to watch out for here is first how the flows come in, because equity markets are expected to remain volatile in the first half of calendar year 2019. So that is one thing that an investor needs to watch out for. And secondly, starting April, how do these AMCs share the impact of this lower total expense ratio that will start from financial year 2020, because that could also impact the flows in a bigger way for the AMCs. And also, if you see the company's revenue starting FY20 will depend on how they share this impact of the lower total expense ratio with the distributors. So that is one thing that one needs to watch out for.
Okay, thanks for that comparison, Somit. Keep in mind, just one small point here. If you are bullish on the asset management business, then it may not be a case of either or. You may well choose to take a bet on both for completely different reasons. In RNAM's case, I think the valuation works in its favor. But otherwise, HDFC AMC has been hitting the right notes even in a tough quarter, at least some of them, even in a tough quarter. Let's wait and watch how the next few quarters shape up. Can Maruti hit the right notes? A decline in sales volumes is likely to keep its third quarter performance muted, however. What's also aiding to the headwinds are rising input costs and heavy discounts. Yatin Mota is here to take us through what to expect from the big boy this quarter. Yatin, good morning.
Well, good morning, Neeraj, and a very interesting quarter for Maruti this time. We have seen the stock price correct from 7,800 recently to a level of sub 7,000. So there is a lot of nervousness on the street regarding the third quarter earnings. In December, we saw the discounts which are offered by Maruti were at record highs. So clearly there is a fear in the marketplace that the margins could miss the street expectations. What will the management really talk about the demand? But talking about the third quarter preview first, the total revenues for Maruti, we are looking at it at a level of 19,600 crores. That will be a marginal uptick of 1%. Remember, Maruti's third quarter volumes were down 1%. So we are talking about a realization growth of nearly 2% for Maruti on a year-on-year basis. EBITDA, as you were mentioning earlier, higher raw material costs as well as discounts would be eating into the profitability for Maruti Suzuki. So we are expecting a 14% decline in the overall EBITDA. Net profit, of course, would be seen lower by only 6% to a level of close to 1,700 crores. Margins, and that is something important that we'll be watching out for. The Bloomberg poll is throwing up a figure of 13.4% on the operating performance front, which will be a significant decline to a level of 15.8% last year, same period. Of course, if you look at the margins, last quarter it was 13.1%. So the street is divided between level of 12.5 to 13.5. Let's see how really Maruti delivers the numbers, and more importantly, what will be the management commentary with regards to 2019 new launches as well as the demand scenario, especially in rural markets wherein they are making some inroads, is something important we'll be watching out for apart from the earnings.
Well, let's wait and watch. What is that most important number, Yatin, that you would watch out for in the results today?
For sure the margin performance. 13.4 is the estimate. Let's see how Maruti performs because discounts have been widening. Raw material costs are higher, so there is a lot of headwind on the margin performance this time, and multiple factors and multiple levers that will take the margin here and there. So let's see how do they deliver this 13.4% expectation versus this 13.4% expectation.
Okay. So, well, our head of research, Yatin Mota, tracks this space very closely, believing that the margin number of 13.4%, the most crucial one to monitor in this session today. Yatin, thanks so much for putting that into perspective. Well, sticking to autos, the 1st of April 2020 will be a Y2K moment for the Indian auto industry, says M&M Managing Director Pawan Goenka. Is speaking to Menka Doshi in Davos and said that some Mahindra vehicles may miss the deadline to switch to Bharat Stage 6 emission standards. Listen in.
I have been sort of floating this idea of 1st April 2020 being the Y2K period for auto industry. Because everything will change. Just imagine the complete fleet sort of sales, which is 500,000 or let's say 400,000 vehicle a month, changing overnight from BS4 to BS6. And it's a very huge task in terms of supply chain management, in terms of ramping up BS6 ramping down BS4. And now since there is a constraint on not being able to sell beyond 31st March, we have to make sure that all our inventory is sold by 31st March. And it's very difficult to control that. So what will happen on 1st April? Very hard to imagine. In terms of meeting the norms, everybody is putting a brave face that yes, it's a regulation, we'll meet it. But the fact is that as it is, we were really stretched in terms of 31st March for manufacturing last date. What has happened now with the sales date being 31st March, we have been pushed another 2 months or so. Everybody will work hard. I don't think anybody can guarantee that they'll be all ready. What I can say is that for most of our high volume products, we'll probably be ready just in time.
Okay.
But some of the lower volume products may spill into April, May.
And that could be so disruptive from a sales point of view because you won't be able to sell if you don't have the product, right?
So we'll obviously work hard to minimize the,
Sure, I understand
impact.
that,
But you
yeah.
should also keep in mind that there is a very high likelihood of pre-sale happening because of the BS6 prices being as much as a lakh more for diesel vehicles. There are a lot of pre-sales. So as it is, April, May will be a dull month, independent of whether we are ready or not ready.
Well, that's all that we have on First Word today, but lots more lined up for you on Indian Open. We discuss markets and macros with Sunil Subramaniam of Sundaram Mutual Fund, decode the December quarter earnings of Ujjivan Financial Services with Ittira Davis, and Anupam Jindal of Sterlite Tech. But after this break, a full tilt towards the day's trade.
One way to do that is to collect and celebrate the life lessons of those people.
Deepak Ramola, the man behind Project Fuel.
FUEL stands for Forward the Understanding of Every Life Lesson.
His audacious mission is to immortalize the wisdom of as many people as possible.
One thing I was absolutely sure about, I don't want it to be a quote on the wall. I want people to experience. So the experiential part is where we use different tools and mechanisms to create one act, and the act is of making lives count.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
हकीकत में ये गुड एंड सिंपल टैक्स है। The 500 rupee and 1000 rupee currency notes will no longer be legal tender from midnight onwards.
Right, back with Indian Open right here on Bloomberg Quint. Let's see how the Asian markets are faring at this point. About 0.5% or 1% higher for almost all of the key benchmark indices. In fact, more than 1% for the Hang Seng. And the SGX Nifty 2 indicating a start which is about 0.5% in the green. So start will be in the green. Keep that at the back of your mind. But never know if that will sustain or no. Our promise is to be the first week after many, but in the world markets would, or the major world markets could end with a negative tick for the week at large. So it'll be interesting to see how we shape up during the course of the day. How are we set up for that? Let's try and take a look at the derivative space. Agam Vakil is standing by with the FNO setup. Agam, morning.
Good morning, Neeraj. Well, we really haven't seen too much change yesterday, despite the fact that, well, we did see a lot of activity and increased activity in the last half an hour of trade. So as you can see, absolutely unchanged when it comes to open interest on the Nifty futures. But the bank Nifty futures have seen a severe unwinding with a decline of 9% in OI. Your India volatility index has also come off to a certain extent, but I suspect it will remain at these levels considering the kind of volatility that we saw once again, essentially in the last 1 hour of trade. Your open interest distribution, nothing much has changed there, save for the fact that we have seen increased resistance building up at around the 11,000 mark, considering the 11,000 call and the open interest in there. Let's talk about change in open interest. Two options that stand out. One is 10,900 put, and the other one is 11,100 call. Both of them seeing unwinding. And then your put call ratios largely unchanged for both the Nifty and the Bank Nifty. To talk about those stocks which are in the F&O band, Jet Airways, Reliance Capital and Gen Irrigation, not much has changed here. And in terms of other stocks which were also seeing a lot of activity yesterday, we had the likes of Exide and TVS Motor Company continuing to see pressure with fresh shorts building in, and Equitas on the other hand gaining. And in terms of those stocks which are looking at unwinding, we have United Breweries and Interglobe Aviation looking at considerable decline in open interest. Again, another day of mixed cues where broader markets will underperform the benchmarks, and we're going to have to wait and see whether or not that trend changes or continues today.
Yeah, well, thanks a lot for that, Agam. And I think on the F&O side as well, one would be watching out for Yes Bank to see what that one does in the session today. Yesterday, the common belief was that a short squeeze would have helped in some bit to the stock. Remember, the stock shares jumped about over 14% intraday trade, ended about 9% higher after the private lender announced the appointment of a new CEO, Ravneet Singh Gill, who currently heads Deutsche Bank's India operations. He will take over from Yes Bank founder Rana Kapoor, who has to step down at the end of this month. Joining us on the show is Krishnan ASP of SBICap Securities to talk about Yes. We'll also request Krishnan to maybe throw some light on whether ICICI Bank has, as a stock, could have some issues too. But Krishnan, thanks so much for taking the time out this morning and speaking to us. This is Neeraj here. Good morning. What's your thought now? I mean, are you still waiting for the divergence report to get some more clarity before you give out a larger call on Yes Bank, or this change at the helm is good enough for you to think that there could be some re-rating of the P multiples or price to book multiples?
Yeah, hi Neeraj, thanks for having me on the show.
Pleasure.
So we have been generally, so given the kind of beating that the stock took over the past 3 months, we were comfortable to stick our neck out and say that, look, I mean, there is disproportionate return here. The biggest uncertainty we felt in terms of order of preference also was around leadership succession. So that having been addressed, I think the divergence issue will be largely absorbed. It will be a minor blip, no matter what that number eventually is. I think it will be something that the market will digest more easily, given that now you have a new MD, seemingly independent, given that he's coming from, he is an external candidate. So to that extent, there is less regulatory baggage. So to that extent, I think so divergence, of course, is an important variable, but was that the most important variable? Probably not. I think the leadership succession was indeed the most important variable. That having been addressed, I'm not too worried about the divergence number coming anytime. Whatever be that number, I think the market will adjust the book value accordingly. I think the single largest priority now will be when can they go out and raise growth capital. So that would be crucial. There are other important variables there in terms of the existing management team and stability of the existing management team. The stability of their existing strategy. Very clearly, they have had certain strengths. They have been trying to build a retailization story on both sides of the balance sheet. So if they were to just go back to their own steady state, I think it will restore normalization much more quickly. On the other hand, if the new MD was to decide he wants to run the bank in a very different way, then that's a complete reset. So then that will call for more patient investment.
Interesting. Okay, so, well, a bold call given by Krishnan way back, some time back as well, wherein they believed that the risk reward was in the favor of somebody who went and bought. And yesterday, I think Krishnan's call is well taken, because yesterday the stock went up primarily because of the change at the helm of the bank. Krishnan, the thought that I would have is, though, that we were just looking at some numbers. Yes Bank's FI holding has fallen to 35%, the lowest in the larger banks. I'm not even counting Kotak and HDFC, but the comparable corporate-facing banks. So the lowest in that group, and the valuation multiples too, the lowest. What return, maybe not the return to mean, but what kind of upticks do you see in both of those as a result of this? Do you reckon your FI clients that you would have spoken to after this announcement yesterday were sanguine about this and were wanting to maybe deploy some capital in Yes Bank?
Selective, very selective. I mean, there are both types of investors. So
Sure.
there are investors who are willing to take the plunge. Put here and now, they were willing to take the plunge at 180 levels as well, right?
Okay.
And then there are other investors who are willing to let go of the first 10-15% pop-up, knowing that, look, if this is going to be a more secular run for the bank, if this is a new avatar of Yes Bank and this is likely to sustain itself for much longer, I'm happy to live with whatever return I make, X the 10% up move that I saw yesterday, right? So
Okay.
they would probably wait on the sidelines. There would still be that money that, serious investors who are willing to wait patiently and hear out what the new MD has to say. And maybe 6 months down the line, whenever there is an equity raise, they probably participate once they hear what they articulate.
Got it.
And then there would be others who are looking for, okay, fine, these are good levels. I can stay patiently invested, and there is 6-month return to be made.
Got it. So some wait for the print, some not. So my final question, Krishnan, on Yes Bank, and then maybe one question on ICICI Bank. But final question on Yes Bank: what would be your target price to book multiple with the things that you know at hand? I'm sure if some other surprise comes about, it could be revised upwards or downwards. But from whatever you know as of now, what would be your FY20 target price to book for Yes Bank?
So our numbers are currently implying something close to about 2.4x. 2.4x FY20. That's almost offering about a 35% upside from these levels right now. And that's just in a base case scenario where we now think 1Q FY20. So June quarter of this year is when they might be able to raise equity.
Okay, very interesting. Krishnan, final question. I know we asked you to come and speak on Yes Bank, but just a word on whether all that's happening around ICICI Bank has a bearing on the stock as well. How would you read into it?
It does. It's something that the stock and the bank cannot wish away, right? Very clearly, the regulator, in this case the RBI, could take suo notice and point out that there are, missing controls and systems, correct? So could this have repercussions on ICICI Bank as a listed stock? Maybe not material, but definitely it remains a distraction for investors. Just at the time when you thought that there's a clean runway for you as some corporate bank investor, there come these, speed bumps once in a while. So I think this is a speed bump. This will remain a distraction, I think.
Okay. Krishnan, I appreciate you taking the time out for us this early in the morning and talking to Bloomberg Quint. Thanks much, and have a good day ahead.
Yeah.
Well, that's the view from SBICap Securities. Let's get in Siddhartha Khemka, VP and Head of Research at Motilal Oswal Securities on the show. And I remember my conversation with him when the Yes Bank issue was at its peak, and Siddhartha had said that at 180, 170, they had seen some flows from their clients into the Yes Bank stock as well. Siddhartha, just one follow-up on that. We've discussed Yes Bank ad nauseum today, but just one quick follow-up too. Would you be comfortable putting in more money to work or telling your clients to put in more money to work after the small pop that we've seen already yesterday?
Yeah, Neeraj, good morning. Glad to see that you remember our talk earlier. In terms of exact view coming in today, maybe we can ask some of our clients to wait because we saw a big pop yesterday. But now that the management overhang is behind us, the view becomes much more clearer in terms of the next few quarters. So our view remains positive from here on. We believe that the market will now focus on the operational parameters more from here on, because a big event which was an overhang, we didn't know who RBI would approve and who will come at the helm, whether market will like the name or not. So now that is behind. We have got a good name, a respectable name in the banking circles, and the market has liked that. So that discount has gone away. Now there was a discount to the overall business, given that the RBI is highlighting the divergence in the previous 2 years, and for FY18 the divergence is still being awaited. So I guess the market believes that there could be some divergence, given that the way RBI rejected the former CEO, and that could lead to some volatility in the stock. But nonetheless, from here on, we feel that there could be some upside if someone has at least 2 to 3 quarters of view.
Okay, stay on. I want to talk about so many other stocks with you, but I just first need to go across to our research huddle to try and get our research team to talk about all the key stocks that could move around in the session today based on the results, based on the stocks in news and brokerage calls. Nikki, Darshan as well as Yash are here for that. All of you, good morning. Let's start off with the stocks in news first. Nikki.
I'm going to start off with Interglobe Aviation, where the appointment has happened for the CEO position, Ronajay Datta. That's a positive development coming in for the carrier, given that the carrier has not had a full-time CEO for a long time. So we'd like to keep an eye out on that. Apart from that, good set of numbers reported by the company. Lind India, where the promoter BOC group has rejected the discovery price of around 2025 per share for delisting after the promoter realized that the company's worth is nearly thrice the market capitalization. So again, keep an eye out on this one. Tata Motors, where JLR said that it's going to be halting plant operation for an extra week from April 8 to 12 to guard against Brexit turmoil. And Mindtree, where again is the news after reporting a set of numbers. An ET report suggests that promoter is now in talks with PE institution and HNIs to counter L&T Infotech's intention to acquire Siddhartha's stake. A bulk deal, couple of them that we're tracking this morning. Shankara Building Product, where UBS principal has acquired in more than 2% stake in the counter. Exchange of hands, basically on the selling side, you have Mondrian and Ontario Notch Bank again on the selling side. And again, one more counter that we like to keep an eye out. Notch Bank has actually sold in stake in Care Ratings for a stake of more than 0.5% in this counter. And Balaji Telefilms, where GHI Group has sold in close to 2.5% stake in the counter for a price of around 89 per share.
Okay, thanks a lot for that, Nikki. Shankara Building Products down 5% and sub 500 now. That's an interesting one. Okay, some results that came out post-market hours. Yes.
I'll start with Biocon, and they came out with an extremely good set of numbers. Their revenues have grown by 46% to 1,540 crores. Net profit has almost doubled to 217 crore rupees, while margins they have come in at close to 25% versus 21% in the same quarter last year. So all in all, a great set of numbers when it comes to Biocon. However, not so much when it comes to Quest Corp. Their revenues have grown by 37%, but largely flat on their net profit. So that has grown by about 4%. And margins are largely stable around the 5.5% mark. Emphasis too, it was a steady quarter for the company. Revenues have grown by about 3% on a quarter-on-quarter basis, coming in at about 1,971 crores. Net profit is up 2.6%, but margins they have come off slightly to about 15.8% versus 16.4% in the previous quarter. And Sunteck Realty, they came out with a weak set of numbers. Revenues are down 3.4% to 1,195 crore rupees. Net profit is also down 21%, and margins they have contracted to 41.8% versus 44.2% in the same quarter last year. So 3 good earnings and 1 bad earning.
Thanks a lot for that. Can we expect a good earning or a bad earning from L&T?
It'll be a stable earning this time around. I think commentary on order inflow is something that you need to watch out for. A 15% top line growth, a 16% EBITDA growth. So margins will be stable in and around the 11% mark. Profit will be much higher, 27%, because the other income is expected to be much higher this time around. Order inflow, we are anticipating anywhere between 35 to 40,000 crores of orders to come in. That will be much lower than what we saw last year, given the fact that the base was extremely high and a lot of orders that were supposed to come in the third quarter got preponed into the second quarter. So order inflow probably compared to last year maybe slightly muted. At the start of the quarter, the order book was rather strong. So execution will happen on that, and that's why revenues will come in. Infra segment will be the one that will drive revenues for the company this time around. The order mix is much stable, much more on the domestic side, and that is something that will aid the company. We need to watch out what the management says in terms of guidance, because at the end of the last quarter, the revenue guidance was 12 to 15%, order inflow guidance was 10 to 12%. Whether they maintain it or cut it is something that we need to watch out for.
Okay, watch out for all of these. Nikki, Darshan as well as Yash, thanks so much for that. Siddhartha, maybe I come to you first with some earnings reactions and then some stocks and news. What did you make of the pharma numbers that have come out, Biocon as well as Pfizer?
Yeah, so Biocon, the numbers came late evening. The overall numbers have been pretty good. We have not yet come out with an update on that. In terms of Pfizer, if you see the numbers, again, I have not had a look at that number, so I will not be able to comment on that.
Fair call. So let's leave that out. What about some of the companies that had fairly strong moves in the last 2 or 3 sessions? And if you have coverage on any of those, there is Prabhat Terry, there is ICICI Prudential, amongst others, which moved around quite a bit, and of course Yes Bank, which we already discussed.
Yeah, so Yes Bank, we already discussed. Now we believe that the company will now focus on addressing some of the key issues. I was hearing the previous guest talking about so some of the similar concerns are there about capital raising, about corporate governance, especially on the asset quality and the divergence issues, how the new management takes that forward. The top management continuity, which we saw there was some resignation, especially in terms of the board members, and now with the new CEO, how the top management of the bank continues, or whether they move out, and how the team mix changes, that would be in focus. We have seen that in the past, given that there was a very high growth in the loan book, Yes Bank went into capital conservation mode, basically to see that which will impact the balance sheet growth in the near term. Now with the new management and with setting up the house in order, the capital raising plans would determine how things move forward for Yes Bank.
Right. All right, so that's just stay on with us. Time now to bring on board our technical experts. We've got Shrikant Chouhan, Senior Vice President for Technical Research at Kotak Securities. Along with him, Bala, Chief Market Technician at CashTheChaos.com, is joining us on the show. I'll start off with you, Jay. Good morning to you. And let's take a call on the index first off, on the Nifty and the Bank Nifty.
Yeah, good morning, Devina. See, the index is in a very tricky place, and although I've been believing it's quite bullish for some time. What the index has done is, it had a breakout, but it didn't have a follow through. It had a breakdown, and it didn't have a follow through. So, if you have been trading in the traditional way of buying a breakout or selling the breakdown, you would be trapped in the market. So, that's the message the market has been sending for quite some time. What you have to do is you buy the dip and sell the rip. And once, I think I've been having a price projection of somewhere close to 11,200 to 11,300 for several weeks now, and that's likely to materialize. But what is interesting is that the support levels keep rising and the floor for the market is going up. So as I'm bullish on the markets against a risk level of about 10,780, and resistance for Nifty comes in at about 11,980. And once that's taken out, I'm expecting the original price objective of 11,200, 11,300 to be achieved. And coming to the banking index is actually a tad more bullish, but it's the fact that it's gone up ahead of the Nifty. My sense is that it's going to be bullish to neutral, but within this range of about 26,900 to 27,800. It might, consolidate in a bullish sideways fashion, rather than dipping deeper. So it's going to be stuck in a range for some time. So you got to be selective about stocks within the banking index.
All right, got that. We'll come to your stock-specific strategies in a bit. Shrikant, what about your index call?
Good morning, everybody. See, the way Nifty is turning up, it is clearly into consolidation mode. Earlier it was into symmetrical triangle. Now it has started forming ascending triangle. So the now resistance level is at 10,990. Twice a time Nifty has tested these levels, but it failed to trade above those levels. On the downside, it is forming higher bottom. Earlier it was 10,550 levels. Later on we saw 630, 690 levels, and yesterday's lowest level is very crucial because yesterday's lowest level is the last point of that particular triangle. So 10,800 is certainly going to act as a very good support for market. In case if we see the market is breaking this level in the near term, then we can expect further more weakness, and that will be much sharper than expectations. But overall formation is suggesting us that the markets are heading upward. So 10,800 should be our final stop loss to initiate any long positions, and again we can expect 10,950, 990 on the higher side. Today we are advising to trade long at 10,850, 870 levels with a final stop loss below 10,800. In case if it is opening higher at 10,900, then we should wait because it's a consolidation and it's a range bound market. So in case if there is any correction during the day, certainly around 10,850 go long.
Okay, got that. Stay on with us. We're going to be discussing Shrikant's call on Britannia and SBI in just a bit. But it's time now for our special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Muthoot on your radar today, Yash, and I believe the stock's trading at its 52-week high.
That's right, Devina. We are talking about Muthoot Finance well, there's an early sell signal that the fear and greed indicator is throwing. Let's just try and understand what it is. Basically, the fear and greed indicator is the spread between the two weighted moving average of the true range. It oscillates on a zero basis line, so a positive value indicates a buy signal. How do you interpret it? Well, you go long when the indicator flips its color from red to green, and you sell when the indicator changes its color from green to red, which is in the case of Muthoot Finance. So if you could see in the lower panel is the fear and greed indicator, and as I was mentioning, it oscillates on a zero basis line. So it had been in a positive territory over the last 1 month or so, and now it has crossed below the mark of zero and has formed a big red candle. Now, as you rightly mentioned, the stock is at a 52-week high, and this is an early sell signal. But if you take a look at the price chart as well, it has been making a higher tops, higher bottom formation, but over the last 3 trading sessions, it has been seeing some form of exhaustion because we are seeing the formation of longer candle wicks, and the size of the candlestick chart is smaller, which indicates that at higher levels there is some pressure for the bulls. So that indicates potentially there could be some pressure coming in for Muthoot Finance.
All right. Yash, and how well has this worked for the counter?
So Devina, 6 out of the 9 times that the indicator has thrown a negative, signal, it has managed to give a positive return of close to 5.5% or slightly more than that over the next 1 month.
Okay, Yash, thanks very much for that. That's a quick take on Muthoot Finance. But for deeper insight on Indian equities, visit BloombergQuint.com, where we identify technical triggers that have emerged in a specific stock or a sector every day. On today's Bloomberg Edge, we feature Raymond and what its open interest and price stability band indicate. That's a BQ Blue exclusive. Back to our technical experts then and some stock ideas that they have. Let's start off with you, Shrikant, the Britannia and SBI.
See, for the day, we are like more going to focus on FMCG stocks. The reason is because they are doing really well. They are holding their important support areas. Britannia especially has formed some symmetrical sort of formation, which is exactly correlating with the formation of Nifty, but at the same time it is trading into a very comfortable zone. So from here we are expecting stock to move towards 3270, 3300 levels in next 1 or 2 days of time. Stop loss is very nearby. 3175 should be the stop loss for initiating long position in Britannia. The other stock which we like is State Bank of India. And since last 2 days, all these PSU banks are holding well above their important support areas. Canara Bank, Bank of India, as well as State Bank. We like these 3 banks. At the same time, State Bank has fallen to its important support area of 285, 286. So it's a buy at this price, 288, 289, with a final stop loss below 285. And again, we can expect 297, 298 on the high side.
Okay. Jay, what about your stocks?
Yeah, I'm going with financials with the anticipation that what we saw in Yes Bank and Ujjivan yesterday is going to spill over into the financial space. I have two longs from that sector. The first is a long on Allahabad Bank. It had if you look at the stock movements from the October low, it had a bullish uptrend, and it's pulled back and reversed from important support. We had yesterday's price action engulfed last 2 days of downfall, and the open interest also indicates about 4% interest, 4% increase in the open interest. So possibly an increase in long buildup. So I'm placing a stop below 41.5 and expecting this stock to touch 50 over the next 4 to 5 sessions. So even today's intraday session, it's likely to see some gains. The second is a long on Shriram Transport. This chart is slightly different. It has two interpretations. One is a bearish and the bullish interpretation. But what is common between that two is that the bullish interpretation says that the stock is heading for record highs, and the bearish interpretation says that it's heading at least to a test of its 200-day moving average. So I'm taking the conservative approach and placing a stop below 1080 and expect this stock to touch slightly below the 200-day moving average at about 1276.
Okay, got that. I want to talk a little bit more about some numbers then, and L&T reports its numbers today. Expectations are that they'll probably be almost in line with what the street is factoring in for their net sales, which is expected to come in higher by 15%, profitability about 30% higher. But Siddhartha, I'll come to you with L&T. Obviously, the setback of the buyback not going through, leaving that aside, the stock obviously came off post that, but now ahead of numbers and factoring in the kind of growth projections, what would you do with an L&T?
Yeah, so if you see particularly L&T, we have seen last 2-3 quarters the execution has picked up, although that is mainly on back of the high order book that they had in the previous year. This year the order book intake has been lower, which the management has guided. Nonetheless, we believe that given that it's an election year, the focus of the government and a lot of these projects, they generally move towards execution of the orders that have been given previously, and fresh order inflows are generally seen subdued. Once the election is over, the second half, we could see a bunching up of a lot of these orders and order flows coming in at a faster pace. So overall, we believe that this quarter the numbers would be a very good steady quarter for L&T compared to street. Our expectation is about 12 to 13% top line growth and a 20% increase in net profit. So we believe this the capex cycle should see some improvement going in the second half of the year, and L&T being a market leader should benefit. So we have a positive view on L&T with a buy rating. We see at least 15-16% upside from current levels.
Okay, 2 minutes left to go for market pre-open. Jay, coming to you, yesterday's session, we saw some big moves in the real estate space, Godrej Properties being one, and that's been a constant performer. Would that trigger a buy on the stock?
Yeah, see, Godrej Properties has been one of the better real estate stocks, and it's got a terrific run from the October low about sub 500 to about 775. The recent high of about 775 is in agreement with the momentum. So I think it's still got some more upsides to work with, but it will be better off from a risk-reward perspective if it were to pull back from current levels. But given the fact that it's where it is and the momentum is not is in sync with the stock price, what one can do is, commit about 1/4 of what you want to pick up in this stock at current levels, and then see if there is a pullback. If there is no pullback, you still participate in the next this leg of the move if it's going to take out 775 without a pullback. So that way you are in it, and at the same time you're controlling the risk.
Okay. Keep in mind the other big piece to monitor today, and we'll talk to Siddhartha Khemka about it post pre-open session, would be the listing of Spencer Retail and CESC Ventures, both post demerger from CESC. They'll be listing today. A story around what the listing price could be, of course, there on BQH2, but that notwithstanding, important points to monitor today. So let's wait and watch. More importantly, the divergence in the listing price of Spencer across brokerage is very high. So very important development at 10 a.m. today.
Difficult to put a finger to it.
Very difficult.
Yeah, so we'll see how that shapes up in trade. But we've got about 20 seconds left to go for market pre-open. Looks like we're going to be opening with a positive undertone, about 0.4% higher on the SGX. That's the rest of Asia, which is doing well this Friday morning. Nikkei is up 1%, and similar is the case with the rest as well. 10,929 is what you've got on the SGX Nifty, and that's the pre-open rates going off on your screen. A muted start, nonetheless, just a 0.25% under on the Nifty, but that's changing at a fast pace. Sensex is up about 0.5% right now. Let's take a look at individual movers, and it is going to be interesting to see what Yes Bank does this morning. Yesterday, you had a lot of those shots getting squeezed out of the system, a lot of traders coming in and trying to capitalize on the fast pricing action. Today's session, the first ticks showing you a 10% uptick on Yes Bank. Whether or not that holds is another question. 236 on the stock. Bharti Infratel, after seeing a steep cut, the day it reported numbers and the numbers got digested, has recovered a bit. L&T ahead of numbers is at 1320. You've got M&M, Vedanta, that's up about 1.5% apiece. You've got Enables Housing up 1%, Z is up, Sun Pharma is up 1%, ITC doing okay, and so is HUL about 0.5% higher. Morning start is looking more optimistic, lots more gainers than losers. Bajaj Finance is up 0.5%, Eicher Motors up 0.5%, HCL Tech, that's up about another 0.5%. Amongst the losers, handful of them, I think just about 6 or 7 stocks, ICICI Bank being one, is down about 2%. Infi is down 1.5%, Bajaj Auto and Wipro losing 1%.
Okay, bring up Biocon and see if that is reacting in the session today. Well, about 4% odd. Let's wait and watch if this lasts. What about Pfizer? And that stock should come up on your screen. India should come up on your screen and see what that is doing. Pfizer reacting marginally to its numbers. Good set of numbers, by the way. The margin performance pretty strong. You know, this shouldn't come as a surprise, but yeah, you know, the promoters have rejected the discovered price. And as I said, a story around this there on the Bloomberg Quinn website as well. But yeah, this is not surprising at all. So this stock remains in focus, and for all the gyrations that Lind India has had over the last few days and weeks, this is not something that an average shareholder would have wanted. But it's okay.
You know, it's actually still off the prices from where when the news of the delisting came in and the stock started to move up. At that time, it was somewhere closer to about 460, 470. So it's still significantly higher than that, because that big move started coming in post the delisting news.
Yeah. So, but yep, for now, lower in trade. You know, I think that the fact remains that Reliance Mutual Fund, one of Lind India's largest shareholders, was, and you know, out of the public shareholding of 25%, they held about a 9.85%, and therefore the discovered price was something that they would found favor with, but obviously the promoters did not find favor with. Anyways, so that's the third one. There were a couple of big movers in trade the last few days. I'm still interested in seeing what ICICI Prudential and Prabhat Dairy are up to almost every single day. And then I'm interested in seeing what Interglobe Aviation is up to as well. There's a new CEO at the helm of Interglobe Aviation, and let's see what that stock is doing. Well, nothing, precious little right now.
Should see Emphasis also post numbers to see how that stock does. 0.5% higher, so nothing much out there, 925. But remember, the stock is actually not done badly, coming off levels of 840 to 925, but still majorly off those levels of 1100, 1150 that it was a few months ago at the time the buyback was announced.
Yeah. Okay. Before we do more stock spotting, Yatin Mota is standing by with the top brokerage calls of the morning. Yatin.
Well, UBS has come out with a report on the auto sector, and today, of course, we have Maruti Suzuki coming out with earnings, and all the auto companies will follow, but not really, you know, positive in terms of the outlook for Indian auto sector by UBS. They, you know, see potential headwinds, you know, regarding the growth of volumes, given the fact that the safety norms are kicking in for premium two-wheelers, as well as BS6 is coming in for the commercial vehicle side, and probably the kind of price hikes that we could see for both two-wheelers as well as commercial vehicles post the implementation of the emission norms and engine modification which will be needed to comply with those norms, we could see an average price hike of nearly 10 to 20% for two-wheelers, causing a slowdown in all segments according to UBS. Not only that, they indicate that Ashok Leyland will have to adopt selective catalytic reduction system, and that might see again increase in costs for Ashok Leyland. Also, they do expect that the petrol growth will offset the diesel decline in the car market, and probably that will also see a flattish kind of a trend. Talking about the recommendations, they have downgraded Hero MotoCorp to a sell, and the target price has been cut by almost 1,000 rupees to a level of 2,650. Also, we have Bosch, wherein UBS has downgraded the stock to sell from neutral. They've cut the target price by nearly 4,500 rupees to a level of 15,500. Ashok Leyland price target has been cut by nearly 15% to a level of 80 rupees per share. Eicher Motors, Bajaj Auto, Maruti, everywhere is where UBS has cut target price. So clearly, auto is something wherein UBS has turned very, very cautious.
Thanks a lot for that, Yatin, and certainly weighing in on some of the stocks as well. Siddhartha, is there a slightly contrarian view that you have on the CV space? Ashok Leyland at 85, not exactly a CV player, but Mahindra & Mahindra has come off quite rapidly in the last few days as well. Tata Motors, the sell-side analysts are a lot more bearish. These 2 or 3 names and maybe some auto ancillary names catering to that pocket. Do you have a contrarian view?
Yeah, so Neeraj, we have seen the overall auto pack, be it the passenger vehicles, the two-wheelers, and now the CVs seeing a huge pressure in terms of volume growth. Add to that, the cost pressures are also being increasing because of the lower growth. The company is unable to pass on the increase in cost through price rise. So in this space, the CV cycle, I don't know, contrarian, but we also believe that the CV cycle could see some downtrend over the next few quarters, and hence one should have a cautious approach on the overall space. M&M may not be fitting as a pure play CV play, more of a rural tractor play, where we believe that could be a stock for the year, given that it's an election year. The government could come out with a lot of reforms and programs for the rural sector. We have seen the numbers also coming in quite steady. So M&M is something we are quite positive on for 2019 with a buy rating. In terms of passenger vehicles, Maruti, again, results are expected today. The numbers are expected to be subdued based on low volume growth, cost increase, so a flattish quarter. We believe the numbers could remain subdued for 1 or 2 more quarters, but given the strong franchisee, given the market leadership, it's a good time to buy a good stock in its bad phase. So someone who has a longish time horizon, investment horizon of more than 1 year, 1 to 2 years, could look at accumulating Maruti at these levels.
Let's get in some chart checks then. And Jay, what would you do with the Maruti and M&M?
Yeah, Maruti has come to very important support, and I have a premonition that today there is a possibility that Maruti could trigger a rally in auto stocks. Probably on results, it's probably going to dip and then possibly reverse. But 6,900, 7,000 zone is a very important support for it, at least from a short-term perspective. But if it does react and turn positive from today's level, there is even potential for Maruti to go to something like 8,700 to 9,300. So watch out for it. Today's price action is going to be pretty critical for it. Even some of the tire stocks like Seat and are also showing some signs of stabilizing at current levels. So it's pretty critical that for Maruti to do something positive in today's price action. If it does that, I will probably lift all stocks within the BSE Auto Index.
Mm-hmm.
Okay.
A quick take on ITC, Shrikant. The post numbers, the day the numbers were declared, the stock was down about 4.5%. But nonetheless, it's not a stock which really moves a lot. What would you do with ITC?
See, Devina, it was like completely unexpected that the stock can fall to such a extreme level in a single day. It was around 294 levels on the day of result. From there, all the way it has fallen to 274. It's a fall of 20 rupees in a day. But yes, while looking at its overall formation, it's a completely range-bound stock. We are of the view that 265, 270 is acting as a very good support for it since last so many months. And the overall broader formation is suggesting us that it is forming some cup with handle sort of formation, which is bullish consolidation formation. So based on it, we can expect stock to remain in a range of 265 on the downside and 300, 320 on the higher side. And in fact, if we go through with recommendation of brokerage houses, then they have also view of 325, 330. So broadly, we are expecting in next 3 to 6 months of time, the stock can again reach the levels of 320, 325. So it's a buy at current levels, more on dips, but with a positional view.
Okay. Stay on with us, gentlemen. We're minutes away from market opening, and we need to tell you all that you need to know to stay ahead in trade today. First up, earnings to watch out for. Maruti Suzuki may post a subdued quarter. Estimates suggest poor growth due to decline in volumes. Margins may contract to 13.4% versus 15.8% on a year-on-year basis.
On the other hand, L&T may post a 15% revenue growth driven by orders of 35,000 to 40,000 crore rupees. Margins may remain stable at the 11% mark.
Linde India promoter, the BOC Group, rejects discovered price of 2,025 rupees per share for delisting. The acquiring entities will launch open offer again after public announcement for delisting, which will happen today.
In earnings that came out post-market hours yesterday, Biocon reported a 46% revenue growth with profits jumping 2.4 times. Biocon earnings surpassed consensus expectations. Quest Corp and Emphasis registered a mixed quarter.
In key bulk deals, UBS buys 2% stake in Shankara Building Products, while Mondrian Emerging Markets and Ontario Pension Board sells combined 2.06% stake in the company at 447 rupees per share.
Lastly, UBS turns cautious on Indian two-wheeler automotive companies, expect potential headwinds to demand with safety norms for premium two-wheelers and the BS6. Well, and we've discussed autos at length. What we haven't discussed in the pre-open session is Yes Bank. So important to discuss that. We've spoken about it fundamentally, but on the charts, Bala 225, a pop yesterday, 4.5% up move in the pre-open session as well. Can somebody initiate any kind of a trade at these levels?
Oh, definitely. That'll be short-term traders, not investors. Investors should have either gone long or sub 190s or at the October lows. But as a short-term trader, you are meant to take this kind of risk, and there is potential for the stock to touch somewhere close to 245 to 250. So even at current levels, about 225, it offers a decent risk reward. So your stop should be somewhere close to 209, 208.
Okay. Shrikant, your calls differ from Jay on Yes Bank?
I think, see, the way yesterday Yes Bank has shown activity and momentum, one thing is very clear that there was like huge amount of short covering. So today we need to see that how it sustains, whether it sustains above the mark of 210 or not, because 210 was acting as a very strong barrier for it since last so many weeks. I am of the view that the stock is gradually heading towards 245, 250. That's the overall view. And in case if there is any correction, then again it can come down to 200 levels. So that should be the range for the stock. But broadly, we are bullish on all private banks.
Okay, fair call. Siddhartha, Khemka, 30 seconds. That one name that was discussed in the meeting today that you're asking your clients to buy and the rationale thereof. Quick thoughts here, please.
Yeah, so yesterday the numbers for Ultratech Cement came in, and the overall volume growth has been healthy. Cost pressures have dented margins, but that's a space on the overall cement space which has not done well so far. We have seen volume growth now, the management giving guidance of a healthy volume growth going forward, and integration and of Benani Cement and a ramp up of the capacity volumes thereof should lead to a healthy growth. So we expect that overall the company should do well on the next 2-3 years period. It's a large cap cement play, again quasi infra can be a contrarian play at this point when a bulk of the market is looking at either a consumer or a private banks. Good stock to hold. Again, a target price of around 4,300, 4,400, giving a decent 15% upside.
Okay, we leave it at that. Siddhartha, thanks very much for joining in and giving us your views this morning. 20 seconds left. I think we'll be in time to take only one top call. Jay, let's start off with your top call today.
Yeah, that'll be Reliance, and it's breaking out, and I think it's heading for at least it's going to go put pressure on the 1325 52-week high. So I'm going long on Reliance.
Okay, Jay, leave it at that. Thanks so much for taking the time out. Shrikant, we'll take in your opening thoughts after the market opens, but here's how we're starting off. The SGX Nifty had indicated its hand. We're starting off about 0.25% higher. Not bad, going for the Nifty Bank to about 0.25% higher. So it's actually not a bad start. Maybe not exactly in line with what the SGX was indicating, but not a bad start nevertheless. Now strengthening about 0.5% for the Nifty 50 now, so more in line with what the SGX was indicating. Banks too around those levels. The mid caps and the small caps, doubt they'll be doing anything different. Yeah, marginally in the green, so not a bad start any which ways. Let's bring up the heat map and see what's moving and what's not. Any big losers? No, not so much. Ultratech Cement, after that 1.5% downtick yesterday, immediately post results. Another 1% lost. ICICI Bank under a bit of a cloud. Do we have Yes Bank at the top of the pile? Yes, we do. So 8.5% today after the 9% up move in trade yesterday. Seemingly the market and traders stroke investors are happy with the change at the helm, and let's see if this lasts, of course. So Bharti Infra, after a slam dunk yesterday, was down about 5%, up about 2.5%, recouping some of those losses. Indiabulls Housing Finance comes up in the session today as well. I'll be interested in seeing what Diwan Housing has done too. But Indiabulls Housing Finance up about 1.7%. Reliance marginally in the green. Axis Bank about 1% higher. Power Grid marginally higher, but a lot of green, very little red. That's the order of the day. Yes Bank shines through in the session today. Ultratech lying a bit soft. Just a couple of newsmakers that I want to highlight before I hand it over to Devina for what's happening across the broader end of the spectrum. Some result reactions, some stocks in news. Let's just highlight them. Firstly, the results reactions on Pfizer, wherein the margin beat was quite impressive. That stock starts off 4.5%, albeit on lower volumes. Biocon, to the numbers seemed good. The results, well, the reaction just about 1%. Linda India, with the delisting plans off now, the stock locked on a 20% lower circuit. This shouldn't surprise anybody, frankly. And lastly, ahead of the results, some NBFC names, 3 of them coming out with numbers today. DHFL, I wanted to see what that stock is doing. It's doing 2.5% as well. So yes, Indiabulls Housing Finance, Diwan Housing Finance, all 3 again in the session today. Growth Finance about 1% higher. Devina, what are you spotting?
With some other earnings reactions, so PNB Housing Finance, net interest income was up about 36%, profits were up about 32%, the stock's up 1.5%. Quest Corp reported Q3 numbers. Profits grew marginally, about 4.4%, but there was a slight squeeze on the margins. Stocks down about 1%. Hatsun Agro, revenues were up about 14%. You had an 8.9% increase in EBITDA, and margins saw a squeeze of about 40 basis points. So that stock, however, still holding up about 0.5% higher this morning. Other than that, Jindal saw is up about 6% in trade. Should pull up an Interglobe Aviation after yesterday's big move. Whether there's a follow-through that comes into today's session. Interglobe, no, that's taken a slight bit of a dip in today's session. DB Realty, that's up 3%. Should pull up Oberoi Realty because that was a real shine through in yesterday's session. Again, another 0.5% gain coming in there. 4% for Godrej Properties yesterday. In today's session, Godrej Properties should follow and see how that one does, whether or not there is any sort of profit taking on that counter. Diwan Housing is up about 2.5%. You've got the likes of Jyoti Labs at 185, that's up 3%. Edelweiss took a slam dunk in yesterday's session post numbers. Slight bit for recovery in today's session, 1.8% higher. That is an Edelweiss. ITI, that's 3.25% higher. You've got Imami, KEC International. Spark is 1.5% higher. Dilip Bilkon, 1.5% higher. And the likes of Reliance Infra, Jubilant Foodworks, all gains coming in anywhere between 1 to 1.5% apiece. So market breadth also looking positive at open. You've got about 781 stocks advancing, just about 350 stocks in the red.
Okay, just one quick thought from Shrikant Chouhan before we thank him. Shrikant, your opening thoughts and any stock that you would want to trade. Your top call for the day.
Yes, Neeraj. See, all these metal companies are doing well in today's opening, especially Tata Steel as well as Hindalco and Vedanta. So we are of the view that we should look for entering into Hindalco, which is trading around 207 levels with a final stop loss below 205, and we can again expect close to 212, 213 on the high side in today's date. From the mid-cap space, Coffee Day looks good because it is around 292, 293 levels, and since last few days the stock is forming some bullish flag sort of formation, which is a bullish continuation formation. So there we have a bullish view, and we should look for adding long position at current levels. Again, we can expect close to 310, 315.
Okay, we leave it at that. Shrikant, thanks very much for taking out the time. Appreciate it. Moving on, Sunil Subramaniam, CEO at Sundaram Mutual Fund, is joining us on the show this morning. Sunil, good morning to you. And 2019, the start of it has not been bad. I mean, we've once again making our approach towards 11,000. But nonetheless, for the rest of the year, the outlook doesn't look that bright. It seems to be more of consolidation, seems to be more of stabilizing at these levels because of the other headwinds which would be faced by us, which come globally, as well as uncertainty around the elections and other volatility impact for us.
I would actually challenge you on that, on the year's outlook.
Really?
Because
how positive are you?
We are very positive, and I'll tell you why. So I think what we are doing is the near-term election uncertainty, Brexit uncertainty, the change in views on the US, which has happened, crude with its shenanigans, rapid. It's caused a mood to become that way. But if you just go beyond the elections, and the fact that uncertainty is something the market hates. So all of these factors I mentioned are uncertainty. So the volatility premium shoots up, and hence that. But you just wait. No, the first is the May uncertainty will get over. Second is, if you look at from a economy versus markets perspective, right? All the stuff that you said in terms of the international do have some impact on our economy, because a growing US is good for our economy, for our exports. But in a shorter run, actually, is that the more uncertainty in international markets, the more flows going to come into emerging markets, right? It's already started in a way, but what's preventing that is the domestic uncertainty. So once that uncertainty is clear, and we'll come to the political play, what will happen in a little bit. But once the uncertainty is out, right? If you look at the growth parameters, the flow of FII flow coming in, right? India is going to be in a pole position compared to all the emerging countries, because look at the emerging space, right? Emerging space is dominated by commodities and energy, right? So a slowdown, global slowdown, means that China slows down, means that suppliers to China, commodities, whether it's Brazil or it's Russia, it's Australia, whatever, they slow down. But India is one of those unique plays there, which is not an export-oriented play. Indian economy is not export-dependent. Our fast failures on growing
It's not cheap. At 19 times, we're not cheap.
And
the world is slowing down.
And when you say these things, these are not unknown facts. So these are also known that India is not a loser in this game of the trade war.
Correct.
So still, even after the market has moved back from levels of 10,300 all the way up until 11,000, FIs are still missing. They are still not really putting in the kind of money that they're expected to put in, if they expect India to be in this prime position.
I'm just telling you that, because of the election uncertainty, the money is on the sidelines. You're exactly reiterating the point that I'm making. There's money there waiting to come in. It won't come in now because they lacked clarity on the domestic front. But when that clarity comes, whichever way it comes, the money will flow in. And I'm saying valuations, if you look at it, India, if you take from 2011 onwards, we have always been at a premium to emerging markets. We are at a slighter premium to the world PE ratio, but a strong premium. And that shouldn't worry us, because money, we have seen that in the last year, right? Large caps were overvalued but got more flows in. So to me, the absolute fact that the PE is at 19 is not a worry. When there is money to come, the tap opens, right? They will not look at 19, and taking 19 to 21 will happen in a jiffy. At 21, then you start worrying, but I'm not sure that at 19 is going to be a hindrance given the growth discount. See, you got to look at the PE. So So the second factor which is coming to on the uncertainty part is the fact that the earnings season, right? This earnings season is crucial, not from the earnings perspective, but from the commentary perspective, from the guidance perspective. So that's the one factor which, for me today, to take a very bold call. So today I'm at 60-40 safety versus risk. That is consumption, consumer discretionary, that's safety versus capex cycle related stuff. I'm at 60 on the safety side because I'm also waiting to see that. But very soon after the elections, I'll shift the opposite. I'll move to 40-60. So why I'm saying this is that, why am I not 80-20? That's the uncertainty factor I'm building in. So the point is, on the balance, to me, the second half of this year is going to be a fairly strong pullback, especially a broader market pullback, because again the focus on the Nifty and the Sensex and the FII money,
Right.
I think there's lots of domestic money waiting on the sidelines because domestic fund managers have also been cautious, and this rise in the rally is despite the caution.
Yeah.
So actually, if all the money had got deployed, we'll be 11.5, 12 Nifty. It's not happening because of the uncertainty factor. The SIP flow continues to be strong. Mutual fund flows continue to be strong. So I am of the view that the second half of this year will see a very, very strong market bounce back for India.
Okay, so in light of that, I'll just, international brokerages, CLSA has put at a target of 11,000 by the end of the year for Nifty. Bank of America Merrill Lynch says 11,200, but that they're being optimistic, they're saying. In an optimistic case, 11,200. You are very optimistic, so what is your best case?
I would say 11,700 to 12.
11,700.
11,700.
How would your portfolios be positioned for such a rally? What do you think drives the momentum upwards? Is it banks and Reliance and a few others, or something else comes to the fore?
From a large cap, mid cap, we have divergent views on what. So IT is still in the large cap side, but not in the mid and small cap side.
Okay, you're
so
bullish on large cap IT.
Large cap IT, bullish in the sense our portfolio will have more of it.
Yeah, that's
from a safety component. So
okay,
when I say bullish, it's not that we're expecting strong growth to come in, but that's the safety play with the portfolio. So consumer discretionary. We believe that those numbers in an election period with a lot of cash flow throwing through the system will see a boost. So consumer numbers will justify the valuations. Hence, that will be a strong component of a large cap portfolio. Retail NBFCs, retail banks will be a significant part of the large cap portfolio. Corporate banks will be a stronger proportion. We believe that the stronger private sector corporate banks are well past the NPA cycle and they're close to the bottom. So corporate banks are the increasing additional allocation in our portfolio, and naturally that's in the larger cap space. In the mid and small cap space, our portfolios are still weighted towards auto with auto ancillaries.
You're bullish there?
Yeah.
Okay.
We
That's
believe
a contrarian view, right?
It's a contrarian view. And then the other thing is...
Sorry, if I can just ask you, so with the recent price deterioration, I don't know if it's a price to earning multiple deterioration because earnings are a factor, but with the price deterioration, would you want to take advantage of that, or in your portfolios you're sufficiently allocated and therefore you can't add more even though you're positive?
Yes, you're right. That's what. So I can't add more. So I've moved my stance from an overweight to neutral, but I'm not going underweight.
Okay.
So right. That's correctly explained.
Okay, sorry, I interrupted you, but
you
were saying autos.
So and then consumer discretionary for us,
in the mid
and the building materials, capex, capital goods, industrials, the capex cycles stocks.
Okay.
Right. That's a very strong component where we are very, very overweight, and then broadly cutting across is the services play. Right, so that's one part where we are reasonably bullish. The one strong underweight is pharma, has been in the last year. We lost out during the pharma rally, but we didn't have the conviction, and neither do we still have the conviction. So pharma continues to be a strong underweight from our perspective.
Interesting.
All right. I just want to go back to talking about the financial space, and I'm going to focus more on the private sector banks. And while I wouldn't want you to talk about specific names, but it's in the open for everyone to see. If you were to compare a Yes Bank, an ICICI Bank, an Axis Bank, an IndusInd Bank, even in terms of the kind of valuations that they have, you have Yes Bank, which is the cheapest because of the kind of stock price correction that it has seen. The FII holding in Yes Bank, and we were discussing this earlier on, has been the lowest compared to the rest of the other private sector banks. And that has happened post Rana Kapoor not getting the extension. But on an operational basis, before the downturn happened, they had a saturation of about 46% from the FII side, dropped down to 36% FII holding. You see that that gap now? Do you see the cover up of that gap from the FII side?
Absolutely. Because like I said, it's only the uncertainty discount which was preventing that allocation. Otherwise, if they go by their standard formula, it should definitely, so that's why I said, the uncertainty is something, even bad news, as long as it's known as bad news, doesn't worry investors like FIIs, but the uncertainty on is it going to be good or bad, that's what they hate. So I would say that huge uncertainty discount will now, with the new appointment, will calm down the nerves and we'll see a normal allocation, which itself will take up a lot of, so I think that's important. So to me, that's the biggest factor, the uncertainty, and that's where, if you have a 3 to 5 year perspective, it's probably a very good time to buy stocks which are getting hammered because of the uncertainty, and where your own research and things gives you a good comfort on the cash flow generation.
But the operational performance is not.
Yeah, that's what I mean.
Okay. Does cement form a part of that? Because it's kind of lying there. It's been hammered down, but maybe not enough clarity on the cash flows. What is the house view?
The house view is that so it's the same as the auto view, in the sense we are overweight, but we are not adding right now. And because there are two things to cement. One is we expect in the short term that the infra thing will, the budget and all of that, you'll see lesser emphasis on infra, more on consumption and giveaway kind of a thing. So to the extent there'll be a small slowdown in terms of government orders on roads and bridges, because cash is important now for other purposes. So to that extent, the short-term demand numbers may not hold through. But in the longer term, the capex cycle recovery means automatically that every capacity expansion needs a construction, needs a shed, garage, factory build up. So we don't see cement demand not rising. We think in the coming years, 19, 20, 21, cement demand will be strong. That being said, there's a very strong geographic component to cement play, because 200 kilometers is the max reach area of a cement factory. So there are pockets like Andhra, because of the capital facing, there's a demand gap there. Bihar, UP, there's a gap, but there are other states which in a surplus. So it's very hard to just go and blindly say buy cement. It will be specific to geographies in terms of those companies which have plans or acquisitions in those areas. That's where you'll see strong price differences in the price of cement across geographies. And so it's a very geography-centric play. So I think when you look at portfolios, you got to figure out that which company is the one which is there in a demand shortage scenario, and you can then have a better price realization. So in that's the qualifier I would put on the cement story.
Yeah, maybe warranted as well to have that. My final question, not that your large cap schemes haven't done well, but over the history, your mid caps have done exceptionally well. What's the stance out there? You gave us some sense of where you are overweight on at the broader end of the spectrum. Where are you most bullish within that spectrum? Is it consumer discretionary? Is it select auto names and auto ancillaries because of the price that they present? Or is it something else?
I would say cyclicals and auto ancillaries are the two consistent long-term bets. Consumer discretionary and larger auto are a little more tactical because of the demand. But auto ancillary, because they have an export leg to component, they have this, we are very, very bullish from a medium-term perspective. The reason I say is that when you mentioned our outperformance on mid-cap, it has been because we have consistently bought stocks with a 5-year perspective, consistently. So a lot of times the near-term views, we have overridden that with the fact that we are, because 46% of our portfolio is in the top 10 stocks, okay? So the weightage. And the average holding period of those top 10 stocks is 4.6 years.
Okay.
So that's, I would say, what has led to this. So the research, buy and hold, buying a company at a reasonable price based on the growth prospects, and sticking through it through the Ups and downs. That's what I think is the key to our portfolio.
Okay. And we wish you all the best for that and more. Keep up the good work. And thank you so much for joining in today
Thank you.
and giving us your thoughts. Really appreciate it.
Wish you all the best.
Thank you. The markets are doing very well. Time now to take a break. On the other side of the break, we decode the December quarter earnings with Ittira Davis of Ujjivan Financial Services and Anupam Jindal of Sterlite Tech.